Hello, friends. It's been just one day basically since my last update, but things are moving fast right now in the markets. So I felt the need to come up with another update for you. For weeks, if you look at my previous videos, for weeks I was saying that I'm bearish and that I was looking for this sell side liquidity area to be taken out. The market has been very difficult in the last weeks with the price moving up and down in a narrow range. But eventually, over the weekend, due to the world events that we all know, the price has accelerated towards my targets. And we are seeing right now that the sell side liquidity being taken out and opening the possibilities that I was talking about of the price moving in a bearish way to the downside in the direction of this higher time frame drawn liquidity, which lays in the area of 23,300. So it's not a pleasure to see all these things, but it's very nice to see that your predictions were right. And let's see what we can expect next. Obviously, we have opened up the week with a very big gap. This one over here. So probably I would not be surprised to see if the price will try to find a sort of a bounce towards this area over here. But if I take a closer look to this new week opening gap from November, which kind of acted as a support, let's put it like this. Now that I see it broken, I could see some scope in price bouncing up, but up to that point, more or less, which aligns very well with this line in the sand here that I drew for, I don't know, for the last couple of weeks. And the bodies of the candles on the daily chart, I'm not expecting to close above the midpoint of this new week opening gap, which is in the range of 24,600, and above this line over here where we say daily close below this is confirmation for bearish bias. Of course, the day has not closed yet. It's just the beginning of the day. It's just the beginning of the week. So we need to have a little patience and see how the day will end up. But I can easily see scope in the scenario that I described for you. So just a bounce in this area, and then we could continue lower. We should continue lower, in my opinion. As I was saying for the last at least a month. Now, can it happen with a scenario like this where we create another range for a couple of weeks? It could be. I don't know. But I'm expecting lower prices. I'm expecting the market to remain heavy. If it goes like this, okay, we have to trade whatever the market gives us. If it decides that you want to go like this, even better. Then my scenario and my predictions will prove wrong, right. Now let's have a look at some other assets, obviously, because the whole market it's under pressure, either to the downside or to the upside. S&P has a similar picture as Nasdaq. Again, I'm seeing this new week opening gap here, and maybe this gap over here doing the same things as for Nasdaq. So maybe a little bounce because we gapped heavily, but the market will remain heavy, and I'm expecting the drawn liquidity for S&P to be in this range of 6,500, where we have this very smooth equal lows on the daily chart. Let's have a look at oil. Of course, oil has gapped heavily to the upside over the weekend, and I will use the weekly chart for oil because oil has stopped. I mean, for now, who knows? Probably we will continue upwards, but we gapped heavily in the last weeks. Basically, the price has doubled from these lows over here up to where we are now, but we were higher, so the price has basically doubled. For now, we met this weekly fair value gap over here, and there is a little bit of rejection out of it. But judging again by the way the prices are looking and the gaps that we have formed, and judging by the events that are going on in the world right now, most probably, we are going to see higher prices. I'm looking at these highs, equal highs over here, as a potential drawn liquidity. They are in the range of $130. But again, I don't think that things will stop there, unfortunately. Because as traders, we want to be right. We want to see higher prices, especially if we are investors. But for a day-to-day life, a price of oil of 130, 150, it's a disaster. Okay, so life will become quite difficult with these kind of prices. But you know, we have to take it day by day, and we have to take and to trade whatever we see in front of us. Last thing that I wanted to show you is the VIX, the volatility index, and I'm using a monthly chart for that, because what I wanted to show you is the following. On a historical chart, we have a number of levels which are very important. Okay, we have down here the level of 1011, which historically uh, can be seen as a bottom. Okay, we see all these areas over here in this area of, let's say, 9 to 11 as being the bottom of VIX. We see the 30 level as being the level where it usually tops out, and we can see the 45 level as the in most of the cases as the maximum level that can be reached in times of extreme volatility. Of course, we are sometimes passing that. This is the uh, 28 2008 2009 crisis. This is the COVID crisis, but nevertheless, the 45 level is a level that usually is not reached. So we are reaching a level of extreme volatility when the VIX is between 30 and 45. Now, March has just started. Today is 9 of March. We have a long way to go until the month will end. But what we can see right now is, first of all, that we have breached the 30 level. And whenever we breach and we close above 30 on a monthly basis, we tend to stay there for at least one more month. So 1 to 3 months, if we close above 30, we stay there, meaning there is a prolonged period of volatility which extends for 1 to 3 months. We see it right here, we see it right here, we see it right here, we see it repeatedly. Whenever we close above 30, the VIX tends to stay there at least for a couple of months. See here, we rejected, so we went back. Here we had a rejection and we went back, but here when we closed above 30, we stayed there for a few months. So keep in mind the fact that VIX can close above 30 this month, and check it regularly until the end of the month. And if it closes above 30, then you will have a confirmation that the next couple of months will be high volatility, inversely correlated with the indices. So if VIX will close the month above 30, we should expect lower prices and higher volatility acceleration to the downside for the indices, for Nasdaq, for Dow Jones, for S&P. So this is my update for now, for today. Thank you so much. Please like and subscribe if you like this kind of content, and I'll see you guys in the next one.